What happened in the crypto markets this week? Bitcoin, Ethereum, and DeFi? This week has seen consistent gains for Bitcoin and Ether. Is a reversal on the way? Bitcoin appears to be on the mend after a sharp drop at the end of last week. The sell-off started on Thursday, March 28. Bitcoin had peaked at just over $57,000 the day before, but by the end of the day on Thursday, the price had dropped to nearly $51,000. A number of analysts noted that the correction was especially surprising given the record amount of options expiry on Friday, March 29. Many analysts questioned whether BTC was at the start of a larger bear cycle as a result of the price correction. However, since the price of Bitcoin bottomed out last Thursday, it has been steadily rising. The recent announcements by Visa and PayPal to further integrate themselves into the crypto world appear to have bolstered the rise. The big question on everyone's mind right now is what will happen in the next month. Will Bitcoin be able to reclaim $60,000 and beyond? Is another drop in the cards before Bitcoin can regain its footing? Throughout 2021, Bitcoin has been bolstered by positive news. Doug Schwenk, chairman of Digital Assets Research, DAR, told us that he believes Bitcoin has more room to rise before another correction. BTC has just recovered from $51,000 around option expirations a week ago to approach the $60,000 level, he told us. Given the rate of recovery, there are clearly strong price tailwinds. What is causing these powerful tailwinds? In addition to the recent PayPal and Visa news, Doug stated that we continue to see positive news in institutional adoption, such as Goldman Sachs' plans to offer to wealth clients and continued ETF filings and approvals in Canada and Brazil, as well as filings in the United States. It's easy to imagine BTC breaking the psychological $60,000 barrier and moving higher if mostly positive news continues, he said. Markets could benefit from positive regulatory news in the United States outside of the world of institutional investors. The entire industry is waiting to hear what Gary Gensler, the new SEC chair, and the other new regulators at the CFTC and OCC will say about clarity and support, Doug said. This excitement, however, could backfire. Any comments that appear negative could easily drag BTC back in the short term, as could positive progress on a central bank digital currency, CBDC. Bitcoin is being amassed by large institutions at an unprecedented rate. Even if a short-term pullback is possible, Justin Hartzman, CEO and co-founder of CoinSmart, told us that analysts have been calling for much higher prices this year. I believe that as more institutions enter the market and inflation as a result of money printing around the world increases, the mass market will become more interested in cryptocurrency. From there, it's just a matter of supply and demand, he explained. Indeed, as COVID stimulus relief in the United States continues, the USD's status as the world's default currency may be eroding. While there is still some debate over whether Bitcoin is a true hedge against inflation, the fact that more investors, particularly those of the institutional variety, are buying and hoarding more BTC than ever before is encouraging. According to Marcin Koligo, CEO and founder of Coinero, a significant amount of Bitcoins is regularly removed from the market. In other words, it appears that an increasing number of investors are purchasing Bitcoin and then storing it in cold storage, making it more difficult to sell. Such accumulation is an argument that we are far from a market crash, because such crashes are preceded by more liquidity flowing into the market from long-term hodlers, Koligo explained. How will Bitcoin's famed volatility be affected as more institutions accumulate it? Koligo also stated that if the trend of large-scale accumulation continues, there may be a fundamental shift in the way Bitcoin operates in cryptocurrency markets. It will be interesting to see if Bitcoin's volatility continues in the future, he said, referring to this unprecedented corporate accumulation. While previous peaks and crashes were heavily influenced by retail runs and panic, he said, it remains to be seen if corporate holders react to market developments in a less emotional manner. Corporate Bitcoin ownership has reduced overall market leverage, which has already increased stability. ETH is on its way to a new all-time high. Other cryptocurrencies appear to be riding along a bullish trend as Bitcoin continues to stabilize above $50,000. Ether, ETH, the native token of the Ethereum blockchain, was closing in on its previous all-time high of $2,036 at press time, with a price of $1,998. What is causing Ether's price to rise? However, the Ethereum network continues to face significant limitations in terms of how frequently it can be used. Transaction fees on the network have been skyrocketing for months and show no signs of abating anytime soon. The network is currently migrating to a proof-of-stake (POS) consensus algorithm, which developers claim will lower transaction fees and increase the network's transaction per second (TPS). The process of migrating to the new algorithm, however, may not be completed until 2022. The future of the Ethereum network hangs in the balance. As a result, Ethereum's price may be approaching a limit in the short term. According to Doug Schwenk, ETH is currently trapped between the adoption of DeFi and high transaction costs and limited transaction bandwidth. DeFi has been a hot space over the last 6 months and has been largely built on Ethereum given its brand and smart contract capabilities, he said. However, as gas fees rise and maximum throughput constrains the network, Ethereum demonstrates some fragility and shifts innovation to other blockchains. Despite these potential constraints, there is a path for ETH to make more gains in the short term, with a planned Canadian ETH ETF and the best-known smart contract brand. It's likely that ETH will continue generally upward until network problems are resolved or a clear consensus replacement emerges, Schwenk explained. Meanwhile, Ethereum's technical stumbling blocks may have paved the way for the rise of other smart contract-enabled blockchains and their native assets. According to Coinero's Marcin Kolago, Ethereum is an asset with significant potential that is currently hampered by high gas fees. This has fueled competition, such as the Binance Smart Chain, which is centralized but significantly less expensive to use, he explained. Once a credible solution to the Ethereum gas fee issue appears on the near horizon, the market will begin discounting it, and price movement can be expected. There is still room on the market for competitors until then, and it remains to be seen if any of them establishes itself as the new go-to solution. Regulators are focusing their attention on the expanding DeFi ecosystem. Indeed, the DeFi ecosystem is rapidly expanding and will most likely continue to do so, with or without Ethereum. According to CoinSmart's Justin Hartzman, much of this growth has been fueled by increased interest in crypto interest-earning products in the DeFi space. Some of these products boast interest rates ranging from 8 to 25%, he said, adding that investors should be sure to take note of the risk involved in these new and frequently too good to be true offerings, as DeFi products still carry some risk. According to him, DeFi's growth is being amplified with the ever-growing extremely popular NFT market. While there may be exciting times ahead for DeFi, regulators are increasing their focus on the space, which may cause some hiccups in the space's growth. Marcin Kolago specifically mentioned the new FATF, Financial Action Task Force, draft guidance, which was published last week. According to Kolago, the guidance's appearance implies that regulators are adjusting to rapid DeFi growth and will drive more compliance and AML measures in the industry. While such measures are difficult to implement in a decentralized network, they may lead to market consolidation and the increasing importance of crypto RegTech in the long run, he said. While crypto crime may be decreasing year over year, as evidenced by Chainalysis crypto crime reports, rest assured that DeFi will be impacted by regulation in the coming years.